Hello YouTubers, Alaska Prepper here. Ladies and gentlemen, these are two reasons that I've been talking about for a while that is a sign or a signal for you to get everything that you need ASAP. I'm not saying to go out there and max out your credit cards. I think that if you have a way of paying back that credit card within a month or a couple of weeks or before you pay any interest on it, that it's okay to go out there and use a credit card to buy your preps. For example, I use my credit card to buy my preps every single month, but I've never paid interest on that credit card, not once, because I always pay it off before any interest on it is due, meaning that I pay it off every cycle. But this is the time, ladies and gentlemen, that we need to be getting prepared more than ever. Why? Because inflation is not going to get any better. As it states here on this article, the inflation crisis is worse than admitted. And something that is kind of scary looking to me when looking at some charts, I'm going to show you some charts real quick before I go about to read this short article here, is the interest rate. Now take a look at this. This here is the chart for the 10-year bond. Now you can see here that it's made a high, all right, a recent high, then it's gone down, and now it's at a double top. A double top, okay? That is an indication. Now remember that I am an amateur when it comes to technical analysis, so I'm telling you what I think. To me, this is an indication that one of two things are going to happen. One is that this is just going to continue to go up. All right, it's going to continue to go up. A lot of businesses are going to close. A lot of mortgage brokers are going to go out of business. A lot of people are going to stop buying houses, and a lot of people are going to be underwater in how much their house cost in regard to how much they owe on their houses if this continues to go up. Now, another thing that can happen is that this right here can go down and then come back up. And if that next high has a shorter high than this one right here, then that means it's going to be a head and shoulders pattern, which is a very bearish signal, meaning that interest rates are just going to plummet down. Now, what happens if interest rates plummet down? Inflation gets worse. That means that things are going to be a lot more expensive, nominally speaking, than they are now. Why? Because the lower the interest rates, the more money that there's going to be out in the economy, the more inflation that there will be, which is the inverse of what would happen if this continues to go up. If this goes up right here, continues to go up, then think about it. The asking price for a house is going to have to drop because mortgages are going to become too expensive. Higher interest rates means that you're going to have to be paying more for that loan than lower interest rates will. That's the problem that we've had all these years here. With all of these artificial low interest rates, the price of houses, the price of things to mortgage a home, to go to college, all right? Notwithstanding that it's government backed also, but also to buy cars, to buy expensive things that you have payments on for years. Those things have been pretty low. Why? Because the interest rates have been low. Now, the higher that this goes, the worse that is going to be for the housing markets. People are going to be underwater, and banks are going to loan out less money than they are willing to, meaning that it will be deflationary. The government hates deflation. They hate deflation. Why? Because they collect a lot less taxes when we go into a deflationary spiral than into an inflationary spiral. And governments see inflation as an easy way to pay off existing debt. So get ready, ladies and gentlemen. Get ready now. This is the time to get ready. Inflation is not a new problem in the U.S. There has been a steady expansion of price inflation and a devaluation of the dollar ever since the Federal Reserve was officially made operational. And they say here in 1916, which it may be 1916. I know that it was signed into law, I believe, 1913. But it's kind of interesting that the Federal Reserve was made operational in 1916, and then I believe that we entered into World War I. I believe it was 1917. Correct me if I'm wrong down in the comments. This inflation is easily observed by comparing the price of commodities and necessities from a few decades ago to today. So, ladies and gentlemen, either way, we are between a rock and a hard place. And I say we because I really should be saying the Federal Reserve and the government is, but it's really not them, because it is we the people that pay the price for their policies. The median cost of a home in 1960 was wow, $11,900, ladies and gentlemen, which is equivalent to $98,000 today. In the year 2000, the median home price rose to $170,000. Today, the average sale price of a home is over $400,000. I think that average sale price in the next year or two to come is going to be really, really a lot lower than that is. Inflation apologists will argue that wages are keeping up with prices. This is simply not true, and it is not true. Anyone that lives in the real world that works a 9 to 5 knows that inflation is not keeping up with prices, and it hasn't been true for a long time. I have to do this right now. It's not part of this article or anything like that, but let's just take a quick look at what it would cost to buy a house in gold back in 1960 and what it would cost to buy a house in gold today. So in 1960, the average price of an ounce of gold, I believe, was $35. So if we go 11,900 and we divide it by 35, it would have cost 340 ounces of gold to buy a home back in 1960. Today, the average price of a home is $400,000, let's say. It's probably a little bit more. So if we go 400,000 and we divide it by, let's say, 1840, which is about how much an ounce of gold costs today. Ladies and gentlemen, today it costs less gold to buy a house than what it did back in 1960. 1960, 340 ounces. Today, 217 ounces. Meaning what? Meaning that gold has gained strength against the dollar since 1960 to today. Really, since 1913 to today, it has gained strength against the dollar. That there tells you that inflation is real. Inflation does not work for the average man or woman, and that your labor, your salary, your wages does not keep up with inflation. That very simple exercise right there that we did proves to you that the dollar has been greatly devalued against gold, and that, more importantly, your wages have not been able to keep up with the demise of the dollar or with inflation. In today's terms, a certain measure of home prices increases involve artificial demand created by massive conglomerates like Blackstone buying up distressed properties. And we've all heard that Blackstone's been buying up a whole bunch of properties so that they can rent them out. We can also place some of the blame on the huge migration of Americans out of blue states like New York and California during the health crisis lockdowns. However, prices were rising exponentially in many markets well before this health crisis. Americans have been dealing with higher prices and stagnant wages for some time now. This is often hidden or obscured by creative government accounting and the way inflation is communicated to the public through the CPI, better known as the CPI numbers. This is especially true after the inflationary crisis of the late 70s and 80s under the Carter administration and Fed Chairman Paul Volcker. Now, if you take a look at this picture right here, ladies and gentlemen, it says roll back food prices, right? Now, these people here, they're advocating for price controls. Price controls never work. Price controls is the second thing that I've been talking about. I've been saying inflation is going to devour your purchasing power. Get stocked up now. Another thing I've been talking about is, I remember putting out a video a while back, and I've talked about it since, that as soon as you start hearing price controls from government pundits and the mainstream media pundits that back up the government's agenda, you should really think about getting prepped up. And here, ladies and gentlemen, the Federal Reserve is warning this administration that they should not do price controls. Why? Because they just don't work, ladies and gentlemen. Price control really works? I think not. As inflation soars, a growing number of progressives are blaming gouging. First big oil and now big shippers, pressuring the Biden administration to impose price controls. Ladies and gentlemen, I tell you what, if we get price controls, one of the first things I'm going to do as soon as we hear that we are getting price controls is I am going to go out and buy as much stuff as I can, more than I have now, that I know that I'm going to need in the future. Like I'm going to go out and buy extra pairs of jeans, right? I'm going to go out and buy another pair of boots, even though I've already got 2 or 3. I'm going to go out and buy all the stuff that I can that I know I'm going to need, especially fuel, right? I'm trying to figure out how I can get my hands on more fuel because price controls always lead to higher prices via a black market and non-availability, i.e., why the black market? Because when things have price controls on them, a black market emerges and those things become a lot more expensive and a lot more scarce to the average person. You should be stocking up right now. The problem is they never work. All right? Price controls never work. Price controls distort signals that are used to allocate scarce resources, leading to the inefficient allocation of goods and services. Adding that such controls have significant costs that increase with their duration and breadth. Neely suggests appropriate fiscal and monetary policies can reduce inflation without the costs imposed by price controls. And ladies and gentlemen, monetary policy is the problem. The monetary policy that not only this administration, but every single administration in the past, ever since 1971 and above, when they took us off the gold standard, they are the problem because their monetary policy is one of expansion, one of growing government, one of giving themselves more power. And by imposing those policies, what they have done, ladies and gentlemen, is strip us of our labor, strip us of our wealth. Why? Because inflation does one thing and one thing very well. It diminishes the labor that you are working in order to earn that money. And I'll leave it with this, ladies and gentlemen. I'll leave the link to these 2 articles on a pinned comment. And the conclusion is this: price controls have had a very long but not very successful history. And although economists accept that there are certain limited circumstances in which price controls can improve outcomes, economic theory and analysis of history show that broad price controls would be costly and of limited effectiveness. Appropriate fiscal and monetary policies can reduce inflation without the cost imposed by price controls. The government is not going to do this. They're not going to give up their power. The government's power is the monetary policies that they put forth. That is what keeps them in power, ladies and gentlemen. Without a currency that is effective, governments are null and void. And this government has been stealing our wealth for over 1 or 2 or 3 or 4 generations already. Right? Put in a number. They've been stealing our wealth for generations, and they will continue to do so that they can stay in power. Having said that, I hope you get something out of this. Prep up, ladies and gentlemen. That's all there's to it. Prep up because nobody is going to prep for you. If you think that a magic unicorn is going to come down on you and give you all the preps that you need when you need it after the crisis has started, well, God bless you. But that's not going to happen. Prep up now. You still have time. Things are more expensive, but they're going to continue to get more expensive. God bless you all.